I'm the Business Development Manager for Single Family Housing and for the Maryland Department of Housing and Community Development. And we are here today to explain about the Maryland Mortgage Program and how it can help home buyers. Also to give a very special explanation about this new collaboration we're doing with Garrett County. And so Catherine is going to do all that. I'm going to sit in the back and just, buff my nails and, take notes. But we have some materials back on the table. You can take some if you leave. When you leave, if you want more, I have cards back there, and I'll be happy to send you anything you need. Just email me with any information. And as Catherine, I'm sure will tell you, we will also be happy to come out and give any training to groups. So, take it away.
Good morning, everybody.
Good morning.
Good morning. I understand some of you guys were already in a meeting this morning, so stretch, get up. This is very casual, so if anybody has any questions while I'm doing the presentation, please interrupt me to say, hey, Catherine, I have a question. And again, it's very casual, so if you need to get up and excuse yourself, you're welcome to come back. My name is Catherine Kramer-Dale, and I've been with the state for about 9 years. I've been with this agency for 6. And one of the things that I love about my job is that I get to travel around the entire state of Maryland. And I get to meet really awesome people like yourself. I was excited to come up here today. I was disappointed it rained. I come up here 2 times a year, so maybe I need to get some business cards because I come up here in the summer and I jet skis, and I come up in the winter. I like to ski. I come up here in February, so I'm envious of all you because it's beautiful. I was talking to Paul, and I was telling him that my goal for retirement is to end up having a place up here right on the water. So you guys live in a beautiful community. I go out and I do trainings throughout the entire state for all of our approved lenders as well as our agents. And it's because we want to, first of all, engage that relationship and show the partnership with everyone throughout the state. But also we want to share with you all the information that we have so that you can help promote the programs that are available in the state of Maryland to help all the homeowners achieve, the American dream of being able to purchase a home. I'll go through the PowerPoint. Like I said, if anybody has any questions, obviously you picked up materials when you registered with Cecilia, so feel free to take notes. As Cecilia indicated, all of the materials are available to you, so if you wanted additional materials to take back to your office, let us know. Again, I'll hand out my business cards as well as Cecilia Weller, and I would be delighted to come back up here and do any type of trainings for anyone to educate the programs. Our program today with the state of Maryland is we have a standard program that I go out and do trainings for, and it's called the Maryland Mortgage Program, and that's the information packet that you received. But we go around and do special initiatives throughout the state of Maryland to promote homeownership. So today I'm here to talk to you not only about the standard Maryland Mortgage Program and the Maryland Home Credit Certificate, but I'm also here to educate you guys about the initiative that we have for Garrett County. It's actually being launched today, probably right now as I'm speaking. They're sending out directives to all of the lenders, letting us know that the program is out there. I will share one thing with you before I get started, and I share this even to agents. Our website is phenomenal. I'm a salesperson. I've been in sales and marketing my whole life. Even though I work for the state, I still have sales tattooed on me. So on the back of here is our website. I would strongly urge you to go on our website, and you can write on the back of here. You want to click on when you're on the main screen, you want to scroll down to the bottom, and there's actually a little link that you would click on that says Lender Resources. And when you click on Lender Resources, you're going to see 2 columns of boxes. And the first column of boxes is going to say rates. We generate our rates on a daily basis, and there's a rate sheet that goes out. And I love the rate sheet because it not only gives you the rates for the Maryland Mortgage Program, but it also educates you about other initiatives and their rates that we're offering. And now this Garrett County initiative will show up. So you can actually subscribe to the rate sheet, and you will get that email to you daily. Also in those 6 boxes, a couple boxes down from that, there is a little icon that says notifications and directives. And that's huge. Not that you necessarily want to subscribe to that because you'll get all the notifications and directives, but it'll let you know if there's any policy changes or any new initiatives that are coming out, and it will allow you to print the fact sheet that goes with it. So that's very good tools for anyone to use. For Garrett County, we basically wanted to show the comparison, and we wanted to talk about Garrett County. The median home price in Garrett County is an average of $227 compared to statewide is $270, which I'm surprised really isn't that different. Significantly lower foreclosure rate here in Garrett County, which is good. The monthly supply of existing homes for sale is 4 times higher in the county than statewide, but unfortunately it does take 4 times longer to sell compared to the state. Affordability is lower due to relatively lower incomes, and our out-migration to other counties and other states is resulting in a lower net population. Our goal here is to help improve the affordability in Garrett County by bridging the gap with higher down payment assistance and lower interest rates. The number of available homes in Garrett County countywide are detached homes at 79.1% and mobile homes are at 7.9%. Now please note, when the borrowers do a loan with one of our lenders that are approved with us, the loan actually is underwritten by that lender. The processor for that lender then has a check sheet that they fill out and they upload documents to us, and we are reviewing. I don't like to say underwriting because I was an underwriter for years, but we are reviewing the loan to determine that the borrower is compliant for our bucket of money. So all of our loans end up getting sold to U.S. Bank. U.S. Bank is our final servicer. So to point out, U.S. Bank does not allow manufactured homes, but does allow modular homes. A manufactured home is a mobile home built entirely offset of a permanent chassis that is pulled on the highway to a permanent location. A modular, panelized, or prefabbed homes are not considered modular, are not considered manufactured housing.
Excuse me just a moment. Is that guideline specific to that program, or is that some sort of a national guideline you're following?
It's a national guideline.
Very well.
The Community Development Administration is the housing finance agency for the state, and it offers the Maryland Mortgage Program, like I indicated to you, and the Maryland Home Credit Certificate. All of our loans with the Maryland Mortgage Program are being underwritten, like I indicated, through the approved lenders, and they are FHA, VA, conventional, and USDA loans. We're also going to talk about the Maryland Maryland Home Credit Program. Now, a couple of the things that are very, very incredible about the program that we're having here with the Maryland Pathway to Homeownership in Garrett County is the first initiative is that a collaboration between the Maryland Department of Housing and Community Development in Garrett County. We are partnering with Garrett County, and these are the options that we are offering with Garrett County. The interest rate is 0.25% lower than our regular rate. You receive $7,500. It's a loan. It's a second lien because the lender is the first lien holder and we're the second lien holder. And that's $7,500 in a loan. It's a 0% interest rate loan. The borrower doesn't have to make payments on that $7,500, but it does have to be paid off when you sell, refi, or transfer the deed. Okay? $7,500 is coming from Garrett County, and it's free money. It's a grant. If the borrowers are purchasing the Maryland Home Credit Certificate, there is normally a fee. There's normally a $450 fee that the borrower would have to pay to CDA, and there's a $300.50 fee that would be paid to the lender. If you're going through our program with the Maryland Pathway to Homeownership in Garrett County, we waive our $450 fee.
Catherine,
Yes.
that's for closing costs, right?
Well, ours is a 0% interest rate loan, so we don't have any closing costs. There's no fees attached.
So
On
is
our-
that just to knock the principal down of what they're paying on, or is that for I mean, is that what that's for?
Yeah, basically, when the borrowers are applying for our loan, this money is used for down payment or closing cost. But you can also use this bucket of money to either, you know, if for some reason we weren't offering this initiative in your county and they had to pay that $450 fee to buy that Maryland credit certificate, they could use our bucket of money to pay for that fee. Another thing that I like to educate a lot of loan officers as well as agents is, you know, I understand that FHA is generally the way to go for a first-time home buyer, but our conventional rates are very competitive, and we also deal with mortgage insurance carriers, and the premiums on those are literally cut in half. I mean, there's a significant reduction with our MI. So we educate a lot of our LOs, loan officers, to look at doing a conventional product, because you can use our bucket of money to actually do a borrower paid. You can't do a lender paid, but a borrower single premium paid on the MI. Get it off, get it out of there. And that reduces the borrower's payments. I mean, they may not actually understand, but you will, and you'll know that their payments are going to be lower if you pay out that MI right off the top.
But the 3.5% is still being paid by the borrower.
You still have to meet FHA, VA, and conventional guidelines, but I will tell you this honestly, throughout the state of Maryland, wherever I'm doing a presentation, when you're getting this money from us, and then you're also getting money from other entities that might be available in the county, a lot of times the borrowers can use this money and have it go towards their principal reduction. They can get back from closing with our program. They can get their earnest deposit, and they can get any POCs. But I mean, sometimes they get so much money in these buckets that they're actually getting money back, that they don't even really have to pull their checkbook out. Yes, on our website, when you click on our main page, you're going to click on where it's going to say lenders. Is that? Yeah, this information packet right here.
Oh, okay.
That's all right. On the back of it is the website. And one thing that I think is really neat is it not only lists all of the lenders that are approved with the state of Maryland, it also will indicate that they're approved to sell the Maryland Home Credit Certificate. But we also, and I'll kind of jump a little bit since you asked, but we also partner with builders, we partner with employers, and we partner with existing communities. Because one of the other flyers that you received is the first 5 years that I was with this state agency, I went out and did marketing and education about all the services that our state agency offers. CDA is just one department. Our agency has accessible home for seniors, energy programs, weatherization programs. We not only want to provide you an opportunity to be able to purchase a home, but we want to provide you the opportunities to be able to sustain your housing. If somebody needed to make modifications to their home based on healthcare needs, widening doorways, ramps, accessibilities in bathrooms and showers. And then of course we have programs where we don't want anyone to lose their home. So we have a division that we have, it's called the Mortgage Late Don't Wait, where we will work with our housing counseling agencies, and they will act as a liaison between the borrower and the lender to help them determine, you know, if they want to do a modification or a forbearance agreement or, you know, a short sale if we need to, because we really don't want anyone to go to foreclosure if they don't have to. So our agency offers so many other programs. But this is basically the Maryland pathway. So you're going to get $15,000. $7,500 of it is the 0% interest rate loan that has to be paid back to the state of Maryland. It is a second lien, but the borrower does not have to make payments on that. And the $7,500, that is a grant. It's free money from Garrett County. We waive our fee for the Maryland Home Credit Certificate, and the interest rate is 0.25%. These reservations can now be made from today, which is 11/10, or until the funds are totally utilized when it runs out. And if you click on the rate sheet and you subscribe to it and you get the rate sheet emailed to you every day, you'll see that there's like a little ticker on there that will tell you how much money's left. So you can see how the funds are doing.
How much is in there now?
Cecilia,
Sorry.
how much money is in the total bucket? So on the ticker?
I'll find out.
Okay, we'll find out exactly. layer funds from other sources such as employers, the partners, the builders. Although the departments don't match any of the money that the partners contribute. So I'm going to explain this. Again, I'm sales, so I'm animated. But here's the Maryland mortgage program. Here's that $15,000, because you're getting $7,500 from us, and you're getting $7,500 from Garrett County. In this bucket over here, remember how I indicated that we partnered with builders, we partnered with employers, and we partnered with existing communities. So I educate you to tell your borrowers, or when I go out and talk to lenders, I tell the borrowers to look on our website. Look under our partner match link, and it will tell you the names of all the partners that we partner with. And it's kind of funny, now she'll hear me say this in live person, but I was a salesperson for years. It didn't go away. So shortly after I came up to this department, about maybe 6 months after I came in, my manager, Cecilia, pulled me in and said, Catherine, just have to tell you something. We're getting a lot of phone calls from our partners. It's not bad, but clearly you're a salesperson, so clearly you're talking about this. When I was in sales, I couldn't stand to make cold calls. I hated that. I basically have provided you warm leads. If you look on our website, there's a listing of all of the employers that we partner with, all of the builders that we partner with. I know that these employers have not educated all their employees that their employer would offer them an initiative to be able to purchase a home. And that the state of Maryland, in most cases, are going to match. So under this program for Garrett County, we don't match any of the money, but don't forget, we normally do. But if you go to an employer or you go to a builder and they're going to contribute money because they're a partner, this is extra money that they can use. And the idea of it is you can layer, stack, that's what we say, stacking. You can bring both buckets to closing. That's why in some cases you may have extra money that you can use to pay for fees, or you could use just for a regular principal reduction. Okay? So I have done presentations with employers. I have done presentations inside model homes with agents, with an approved lender. We were all sitting in there holding hands, singing Kumbaya. Because at the end of the day, it's about promoting and selling, right? So that's a good idea.
We have $300,000 in, so we're looking to do approximately 40 loans, 36 to 40 loans, home purchases in Garrett County.
Okay, did everyone hear her? Okay.
And then once that money's gone, it's gone. There's no additional funding planned for that, right?
Under this Maryland Home Path, then that will run out. But again, I'm here to educate you about the Maryland Mortgage Program regardless, so that you would always think of a borrower that could use it. I mean, we constantly are running initiatives. So if Garrett County were to come back to us, who knows? We might offer it again. The opportunity to obtain a Maryland Home Credit Certificate, which can save the borrower thousands over the life of the loan. There is no fee from the Department of Housing, but the lenders can still charge. All of Garrett County is considered a targeted area. So the first-time home buyer requirements don't necessarily apply. Please note that no member of the borrower's household can own any other property at the time of this closing. So let me kind of talk about this. Under our normal Maryland mortgage program, I'm guilty of it as well. I normally go out and I say it's only available for first-time home buyers. And then of course somebody says, well, I'm not a first-time home buyer, so let's talk about something else. But our state agency with this program allows a borrower 3 other opportunities to be considered to apply for the Maryland Mortgage Program. And those 3 opportunities are, if you have not been on a deed for the last 3 years. So I'll throw this out to you. If I was divorced, which I am, and I had been on a deed for 3 years, I could actually, if I was buying in a targeted area, I could come and buy a home and be eligible for the program. If I had gotten into a foreclosure, now again, it needs to meet FHA, DA, and conventional guidelines. So I believe FHA is 3 years, I think conventional is 7. Is long as you meet the guidelines, but if somebody even went into a foreclosure, if you're buying in a targeted area, those 3 years, you don't have to wait. So the first rule is you cannot have been on a home on a deed for the last 3 years.
That's even if you're in a targeted area.
No, if you're in a targeted area, it doesn't matter.
Okay, but Garrett County is a targeted area, right?
Yes.
Yes.
Okay,
Yes.
so we really don't have to worry about what.
That's fine, okay. But if you have military personnel, if they have their DD 214, they can actually apply. And then again, the targeted area is there is no waiting. Anybody can come in and purchase a home. But you cannot own anything at the time of this closing in the world, not just in Maryland.
While we're in,
Excuse me?
just land, you own land,
Well,
no structure on it?
if there's no structure on it, we would definitely want to bring that to underwriting because it depends on the type of property that you have. You know, I mean,
And the value of it.
yeah, what you're gonna put on it, or if you're not gonna put on anything on it. Like I'll give you some examples, and this might make you laugh, but one of the questions on our forms asks you if you have a cemetery plot, because that's actually a deed. But yes, you can, because obviously you've never occupied it, and your intentions are probably not to occupy it anytime soon. Another question that we get a lot is timeshares. Someone can have a timeshare, because again, those are usually deeds, but you cannot own more than 2.6 weeks of a timeshare. And how they came up with the 2.6, I have no idea, but it's 2.6, okay? So again, you know, just email us and let us know what type of land it is, so that they can determine if it would qualify.
All of those programs based on.
Yes, all of our programs are based off income, and I'll go over that with you as well.
Catherine. The stuff to get an automated approval by the loan officer, right? And they're not gonna approve that foreclosure is within less than 3 years.
Yeah,
Or this
basically.
US Bank, will they override that?
Well, no, basically what you do is when you bring a borrower to one of our approved lenders, and I'm sure you guys have relationships with our lenders up here, you would be telling them, hey, I think this borrower would be ideal for the Maryland Mortgage Program, especially for this initiative for the Garrett County path. They would actually then take all the normal documentation that they would for any loan, regardless, because they're underwriting the file to determine they meet FHA, VA, and conventional guidelines. What happens is then after the underwriter at that lender's office approves the loan, then the processor has a checklist that they send us. And just because you guys are obviously very well educated, I'll just tell you, the checklist asks for, we don't even ask for the credit report. We ask for the first page of the credit report, which shows us the credit score, just to see that the credit score is at 640. Obviously, we're taking your word for that the DTI is at 45% because we don't have a credit report, so we can't really calculate what the DTI is. So the lender is making sure that the borrower is meeting our guidelines and following the FHA. So yes to your answer is the lender would not approve the loan if it didn't meet FHA and conventional guidelines because no lender wants to buy back a loan from US Bank. So,
Just looked up too on your site and found out there, and there's a question, you can't own land,
not any land, okay.
consider real property.
Right, I would still, email us though, I still would. Because we've even had situations where we actually had a borrower where she was already in the process of the loan, her mother had passed away a few years ago, and then her father recently passed, and deeded a piece of property to all 3 of his daughters. So I'm not quite sure how the underwriter did it, but she was able to proceed with the loan. So, and again, I don't know all the details of it, but it was basically a deed because of a death benefit. For the conventional loans, again, I mentioned we have significantly reduced mortgage insurance premiums, and the down payment assistance funds can be used for the mortgage insurance up front, thus reducing the borrower's monthly payments. And here again, we're kind of just jumping, but all of our loans are 30-year fixed. Again, we have a network of lenders that we partner with. And again, this is a down payment closing cost assistance program for all purchase loans. The business development team, we travel statewide. If you ever need directions, just let me know. We go around to share the program information and train realtors and approved lenders. We offer programs of overall education, refresher classes, and loan package training. And And what loan package training is that we go to the lenders and show them how to process the file to us. If you have a group that would benefit us, certainly email us, or you have our business cards, you can email me directly, or Cecilia, my manager. This is the website, and this is in the information packet that you have on your desk. It's a very user-friendly packet, very user-friendly website. That's where I was telling you to go to look for the interest rates. We have Spanish available. We have loan products information. We have announcements and promotions that we're offering. There's the information packet. A lot of, too, I will tell you, when you go on the lender resources click and you see those 2 columns and boxes, there's another little box that says marketing tools. You can actually print all of our flyers and all of our information kits and use them as a marketing tool. Here we have an information with interest rate tools for agents. Here's some quick links that you can see on our website. New construction properties must be in a priority funding area. Older communities or locally designated growth areas where state and local governments have already had a significant financial investment in the existing infrastructure. And how do you find out if a property is in a priority funding area is you would go on our website and there is a Google map and you would click on it and you would type in the property address and it will tell you that if it lights up in yellow, then it's in a priority funding area. So all new construction has to be in a priority funding area.
Is all of Garrett County in a priority funding area?
No.
Okay.
All of Garrett County is in a targeted area. But, go ahead.
If it's vacant land, it wouldn't have a street until there was construction. So how would you do it?
Well, if you go on our website and it doesn't light up, like let's say you put or you don't even have a street address, we partner with the Department of Planning. So in our packet, there's also someone that you can email and they can determine if it's that new and they haven't actually determined a street address. Because we get our information from DPA, the Department of Planning, so they can let us know if we
That can
can't.
take up to 2 weeks to get it from them.
Yeah,
Better if it's already on the map.
yeah, I mean, it is better, but if you know that it's not gonna show up on our map because it's so new, then you can contact the Department of Planning.
Well, it's just that the street process is signed for building.
Right. You may then be able to contact the Department of Planning and let them know that it's a whole subdivision because they might have it by the census tract.
Also, the planning and zoning down at the courthouse has a copy of the PFA maps. So
Okay.
you'll be able to just look at the parcel and see if it's on the map.
Okay.
Yeah.
And there's a mapper, and the person's name is actually Christina James, so that you would email directly. And that's what the mapper looks like, and again, light up in yellow. Normally, like I indicated, that our loans are generally set up for first-time home buyers, but I've already told you what the exceptions are. The first one was the veteran with the DD 214. The second one is that the borrower would be purchasing in a targeted area, which again, Garrett County is all targeted. So someone could literally own a home right now, and because they're buying in a targeted area, they could actually proceed with this loan application, but they have to sell their existing home, because you cannot own anything at the time of this closing. So you could do a back-to-back closing. Our government loans, our middle credit score is at 660. Our DTI is at 45%, and we do not allow any co-signers on our loans. The borrowers may be single or married, and if they're married, those spouses are not required to apply. But if they are separated, or we need a separation affidavit, but anyone that's going to be living in the household that is over the age of 18, their income is going to be calculated, and I'll go through that in a second as well. You must intend to occupy the property as your principal residence. You must intend to occupy the property within 60 days. So we do get questions about rent back. Yep, but you better be in 60 days. Again, you cannot own any other real property at the time of closing in the world, not just in the state of Maryland. The loan amount may not exceed the lesser of 417. The projected income for all household members, including overtime, part is used to determine the income for the total household, and it may not exceed our established limits. So the lenders actually have a form, it's called a buyer's affidavit, and when they complete that, the borrower is telling us who is going to be living at the home at the time of this closing. So who's ever going to live in the home who is 18 years or older, we are using their income to qualify to meet the household income limits. So if you're caring for an elderly family member and they're living in your home and they're gonna be living in your home, we use the income. If you've got a 19-year-old child that's working at McDonald's, we're using that income. These are the income limit charts. So it's in your packet as well, in the information packet. For Garrett County, it shows, on here, it is you want to flip to the information packet, it'll tell you. It's on page 4. It'll tell you in Garrett County that it's all targeted. It'll tell you that for 1 to 2 household members, the maximum income is 108.6. And for 3 or more members, it is 126.7. I will also share with you, this is kind of a underwriting, like a hee-hee-ha-ha, but if you have anyone that is a 1 to 2 and their partner is pregnant, you can actually bump up to the 3 or more. We have a pregnancy cert that you would actually complete. So just to let you know, if you're right on that limit of the income and they're pregnant, you can actually use our pregnancy cert. For all purchases for the loans for the down payment assistance, a home buyer's education is required for all of our borrowers. There's a listing of the home buyer education classes in our packet. The counseling certificate is good for 12 months, 1 year. If that expires, the borrowers have to take it over again. Garrett County does not have any type of restrictions for home buyers education, and when I say that, I'm saying that in Garrett County, you can look on the listing and see where the housing counseling agency classes are. Some of them can be done online. Some of them can be done in a classroom setting. When we get the certificate from the lender, we're looking to make sure that the borrowers match our 1003 and that the certificate hasn't expired. Again, there's other languages that are available on our website. That is the Maryland Mortgage Program, as well as the initiative for the Maryland Pathway to Homeownership in Garrett County. So I basically went over the fact that you are in a targeted area, so anyone that is purchasing in Garrett County, if they currently own something, they have to sell it because you can't own anything at the time of closing. But there's no restrictions on the fact of them having to wait the 3 years. We went over the credit score, we went over the DTI, we went over the income requirements, assets, I don't know if that was on here, but you cannot exceed, when we look at the 1003, we only get 1 month of bank statements from the lender. So when we look at the 1 month of bank statements and we look at the 1003, you cannot have more than 20% of the sales price. That is liquid assets. That's not 401 or retirement. If you're getting a gift letter from grandma, papa, mom, or dad, we just tell the loan officers, hold off on that, because if you upload that, they may very well bump it over the 20%. Okay? We talked about the home buyer's education. And then, of course, we talked about the awesome amount of money that you can get from Garrett County, $7,500 from the state of Maryland, which again is a loan. The first lien holder is our lender. The second lien holder is the state. That $5,000, again, is a 0% interest rate loan. The borrowers do not have to make payments on that, but it does have to be paid off when they sell, refi, or transfer the deed. Garrett County is putting in $7,500, and that is free money. So the borrowers are getting a total of $15,000 when they go through the Maryland Mortgage Program with the Pathway Homeownership to Garrett County.
The $7,500 from the state that's a loan.
Yes.
The second one.
Yeah.
Could that affect the appraisal when the appraisal comes in on the home at all?
No,
Okay.
no, because there's no payment on it, there's no debt per se. I mean, so it's not gonna affect the LTV
That's
or.
a big issue. Yeah.
They're not loaning above the appraised value, right? You're taking the appraised value and knocking that $7,500 off.
Yeah, we don't count it